Hey everyone, Indian hotel industry has been through a roller coaster ride in last few years. While there was a steady growth in hotel sector due to growing trend for travel, COVID brutally hit this industry. With lockdowns and travel getting closed, hotel sector suffered huge losses. And then post-COVID, when economy opened up, hotel sector witnessed revenge travel with majority of hotels running at full occupancy and that too at much higher rate as compared to pre-COVID levels. The question here is, what next? Going forward, it seems hotel sector is still in its early phase of upcycle and there are multiple growth drivers. So I was going through a very interesting research report and thought of doing this video where I have discussed the key growth drivers for hotel industry in India for both short term and long term and how hotel industry is evolving its business model. I've also covered the key risks that you must keep in mind before investing your money in this sector because it's a cyclical sector. And finally, I have discussed the top stocks from hotel industry. But before we begin, if you're looking for stock tips, then this video is not for you. I don't provide stock buy or sell call. My idea is to spread knowledge for long-term investors to take an informed investment decision after doing their own research. Alright, let's get started. Alright, let's first discuss the short-term growth drivers and then we'll look at the long-term prospects. So in short term, that is in FY24, we have two major events in India. First major event is ICC Men's World Cup 2023. This World Cup is going to be hosted between 15th October till 19th November. The tournament will held across 10 cities, Ahmedabad, Bangalore, then Chennai, Delhi, Dharamshala, Hyderabad, Kolkata, Lucknow, Mumbai and Pune. And there is already a significant increase in hotel tariff in these cities and the occupancy rate during the event would be 100% in these cities. Then second event is G20 Summit in New Delhi. India is the current president of G20 Summit and this meeting is scheduled in New Delhi on 9th and 10th September. So this will positively impact the room demand in New Delhi and Mumbai and nearby tourist location. And hotel rates would again jump sharply. So these are the short-term positives. Now the question is, how are the growth prospects for FY25 and beyond? So there are two major trends that are shaping the hotel industry. First trend is increasing tourism. And this is something that I'm sure you all can relate. This increase in tourism is across your domestic travelers as well as foreign travelers that are looking for leisure travel. And of course, you have business travel where people travel for work. But the biggest growth is among the domestic traveler. And within that, the demand for mid-price segment is the strongest as domestic travelers are value seeker looking for comfort at good price. At the same time, the foreign tourism has still not reached the pre-COVID level. So it is also expected to grow in coming years. Then another second big trend is growth of branded hotel chain. So currently India has around 3.75 lakh keys, that is room, including branded as well as your independent hotel. And out of this, around 1.5 lakh hotel rooms are of branded chain. That's around 40% penetration. Please note that in 2019, branded hotel penetration was around 28% and now it is at 40%. Still, India lags in branded hotel penetration as compared to developed countries. Now, in order to cater to this growing demand, as per research report, branded hotel chains are increasing their hotel network and total branded rooms are expected to grow from 1.5 lakh to 2 lakh rooms. And within that, the major supply would be in upper mid-scale and mid-scale segment. Now there are two very important KPIs that determine the profitability of hotel industry, ARR and occupancy rate. So ARR means average room rate and occupancy rate means what percentage of rooms are occupied. Needless to say, higher the ARR, better it is and higher the occupancy rate, better it is. Now during COVID, we saw a sharp dip in both ARR and occupancy and hence hotel sector witnessed huge losses. But post-COVID, there was a strong demand and that increased the occupancy rate as well as the room rents. Personally, I have experienced around 30 to 50% increase in room rates before and after COVID. What's your experience? Let me know in the comments. Now please note that hotel sector faces both cyclicity and seasonality. This is very important. Let me explain this. So seasonality basically means hotel industry goes through a pattern of high and low demand over the entire year. It basically depends upon the weather, holiday period and travel pattern. For instance, in India, Q3, that is September to December, is generally the best period because of festive season, winter, and then followed with Q4, then Q1 and Q2 is the leanest. So this is seasonality. Now what is cyclicity? It basically means hotel industry goes through a period of business cycles due to supply demand in equilibrium. And this is biggest risk with hotel sector and most important aspect. Try to understand this. So hotel industry has a fixed cost of nearly 50 to 60%. What it means is no matter what the occupancy is, hotel has to pay 50 to 60% cost. That include the employee salary, cost of food, beverage, then your repair and maintenance, loyalty, management fee and so on. So during an upcycle, when demand is good, occupancy is high in the range of 70 to 75% and the room rates are high, hotel makes good profit as the operating leverage kicks in. And that increase in revenue directly flows to the bottom line. However, during the down cycle, when the occupancy rates are low, that is below 60%, it badly impacts the revenue and profit because hotel anyways have to pay 50 to 60% cost, which is their fixed cost. And that result in low profitability. Now the question is, what factors result in upcycle and down cycle? So it's mainly the equation of supply and demand. When there is good demand, hotel companies increases the supply by adding new hotel. That result in more profits. But after a point, increase in hotel supply result in fall in occupancy and eventually the ARR. Obviously, when you have more options with high supply as compared to demand, the occupancy rate would fall and that would result in fall in profitability. Now the important question is, where does hotel industry stand today in terms of business cycle? So this is the research data of last 25 years where you can see multiple cycles. These blue bars represent ARR and red line represent occupancy. Cycle 1 was between 98 to 2002. Cycle 2 was the best phase of growth between 2003 to 7. And then we saw down cycle between 2008 to 13. Again up cycle between 14 to 20. And then COVID resulted in sharp fall in occupancy and ARR. But again, the upcycle has started with increase in occupancy and ARR. So it is expected that we are still in the early phase of the upcycle in hotel sector that might last for a few years. Today, majority of branded hotels are in expansion phase and coming up with new properties. And with rising demand, these hotel companies are expecting good profitability as the operating leverage would kick in and expecting to generate high cash flow in the future and improve their ROCE. I hope it makes sense. The reason why I'm explaining all this is because I want you to make an informed investment decision before you invest your money and understand the entire hotel industry dynamics. Now, next important question is, what will happen during the down cycle? How will hotel companies sustain their profitability during the down cycle? That's very important point. And that's where it's important to understand the business model of these hotel chains, which is a mix of multiple models, including direct ownership, where hotel company owns the property and its entire cost structure. Then second is lease agreement, where the land is taken on lease and managed. And third is your managed model, where hotels do not own the property. It only manages the property at a fixed percentage of revenue model. Now, in order to fulfill the growing demand, at the same time manage their cost, the branded hotel chains are moving towards asset-light model with more percentage of managed or franchised model rather than the complete ownership. For instance, this is the chart of Indian Hotel where in FY19 it had 71% portfolio under owned or leased model and it is significantly reducing. And managed or franchise model is significantly increasing and expecting to touch 49% by FY26. Likewise, this chart is for Lemon Tree where managed properties are expecting to increase from 33% to 47%. This will help them reduce their cost and manage risk, especially during the down cycle. Now that you have got a good understanding of overall picture of hotel industry, let's have a quick look at the top stock in this sector. So the first stock is Indian Hotel, the parent company of Taj Group of Hotels and part of prestigious Tata Group. Indian Hotel is the largest operator of hotels in India with around more than 21,000 rooms as of now and planning to add another 10,000 rooms by FY27. So company is growing at a very fast rate with major focus on asset light investment strategy with nearly 74% of their upcoming pipeline being asset light. Company operate under 4 key brands: Taj, Vivanta, Selection and Ginger. Company has also launched some homestays under the brand Emma and is also expanding its presence in related categories like your spa, restaurants, salon, and TajSet is its largest airline catering company. Over the past few years, Indian Hotel has also simplified its holding structure, which was quite complex, and hence improved its efficiency and governance. Financially, Indian Hotel has struggled in the past due to legacy issues, although the company was always profitable on EBITDA level. Then company started in divestments of non-core business and profits started increasing. But COVID badly impacted the business. However, there is again a sharp uptick in performance. Profit zoomed nearly 3 times from pre-COVID levels and margins have jumped from pre-COVID levels of 20% to currently at 30%. Its share price has been consistently growing since the COVID lows. Currently, Indian Hotel commands a market cap of around 60,000 crore and a price to earning of 57. Now, PE ratio won't be a right parameter for hotel sector as it is still in the growth phase and many upcoming properties will contribute in the profits and cash flow in the coming year. So better criteria would be EV to EBITDA, which is currently at 31 for Indian Hotel. So valuation wise, it looks neither too expensive nor too cheap. Then second stock is Lemon Tree. Lemon Tree is a market leader in domestic upper mid-scale and economy segment, including brands like Aurika, Lemon Tree, then Red Fox and Keys with presence across the country. You can see on this map, highly dominated towards North India as well as South India, and also has presence in few international destinations. Since I also expect the mid segment to grow at much faster rate due to value conscious travelers, where Lemon Tree is leading. So I expect Lemon Tree to outperform in the future. I've also done an in-depth analysis of Lemon Tree a few months ago. Currently, company has a portfolio of around 8,500 rooms and planning to add around 5,500 rooms in the next 4-5 years with again focus on asset-light model. I also mentioned in my video that Lemon Tree is soon launching its flagship hotel Aurika Sky City near Mumbai International Airport that has around 669 rooms and expect to start operation in current Q2 quarter and expecting an average room rate at around 12,000 rupee. Company also has a very strong leadership with Patanjali Govind Keshwani as chairman and MD. He has done his bachelor's from IIT Delhi, master's from IIM Kolkata and was with Taj Group for 17 years as chief operating officer of Taj Business Hotel and has over 32 years of experience in the industry. Financially, Lemon Tree revenues have grown consistently from 290 crore in 2015 to currently at 905 crore and operationally also it has been growing consistently with margins shooting up from pre-COVID levels of 36% to currently at 50%. Although the company was in loss at net profit level till FY18 but started generating profits before it got hit by COVID. And now profits have almost tripled from pre-COVID levels. Lemon Tree is trading at 108 rupee with market cap of around 8,500 crore and EV to EBITDA of around 23. Again, not considering PE due to reason that I have mentioned earlier. So at current valuation, Lemon Tree is looking attractive. Then third stock is Chalet Hotel. Part of K. Rahija Group, Chalet Hotel is an owner, developer, asset manager and operator of high-end hotels in top metro cities including 9 hotels like your JW Marriott Mumbai, Westin Mumbai, then your Westin Hyderabad Mindspace, then your Bangalore Marriott Whitefield and so on. So basically Chalet has long-term management contracts with top brands like your Marriott. So out of 9 hotels, 6 are managed by Marriott and Chalet Hotel earns a fixed percentage from that business. Company has around 2,800 rooms and planning to grow it to 3,770 rooms by FY26. Since Chalet Hotel is a part of Raheja Group, it is also coming up with a luxury residential project in Koramangala, Bangalore with around 321 units which is expected to complete by FY26. In terms of financials, its sales were growing consistently before it got hit by COVID and again jumped. Operating profits have increased consistently before COVID and then again improved after COVID. Margins have jumped significantly and on net profits, it was mostly in loss before COVID but profit have grown sharply post-COVID. Company is currently trading at market cap around 11,000 crore and command a EV to EBITDA of 27. So these are the top 3 picks in hotel segment. Indian Hotel into large cap segment, Lemon Tree and Chalet are in small cap segment. Then you also have EIH Limited, which is the parent company that own and manage premium luxury brands like your Oberoi, Trident and Maidens. The group manage around 29 hotels and resorts with room inventory of around 4,269 across your 6 countries at 15 plus location. Company is also coming up with many projects in coming years and currently it commands a market cap of around 17,000 crore and an EV to EBITDA of around 22. Now apart from these names, there are also many subsidiaries of Taj Group that are also listed on the stock market and have very small market cap. For instance, you have Benares Hotel, where Indian Hotel has around 49.5% stake and company commands a market cap of around 730 crore. Then you have Taj GVK, which is a partnership between Indian Hotel and GVK Group of Hyderabad. Indian Hotel has around 25.5% stake in the company that commands a market cap of around 1500 crore. Then you have another hotel, Oriental Hotel, where Indian Hotel has 28.5% stake and the company commands a market cap of around 1600 crore. In addition to all these hotel chains, I am sure you would be aware of ITC announcement of demerger of its hotel business, which can also be a very potential opportunity. I'll keep a close eye on this. So yeah, this is it for this video. I tried to cover various aspects of hotel sector along with the growth prospects, key risks, including the cyclicity of the business, the role of operating leverage and top stock in the segment with their growth plans. Hotel sector is a little tricky to crack due to high capex business model, but now companies are evolving their business model and moving towards asset light revenue model. So this is a very exciting segment to watch out for. There's no doubt that the trend for travel is only going to increase, but everything will boil down to ARR, that is average room rate, and occupancy that would drive the profitability. So take an informed investment decision. And if you find this video useful, do share it with your friends. I'll see you next video. Till then, take care.